Hello, everyone. Pleased to see so many of you come back and be with us in the second substantive session that I believe will be very interesting. This is session number 3, and the title of this session is Green Capital Markets, Does Supply Match Demand? In the previous session, we've heard about the huge financing needs and gaps in green transition in the Eastern Partnership and Central Asian countries. In this session, we will discuss the role that capital markets in the region can play in financing long-term green investments in helping the countries in the region to achieve their green and climate-related targets. My name is Yucel Inan, and I'll be the moderator for this session. I work in the Climate Strategy and Delivery Unit at the European Bank for Reconstruction and Development, the EBRD for short, at its London HQ. I'm in the Green Financial Systems team. My team develops, structures, and delivers green finance instruments to our partner financial institutions to support green and sustainable investments, including green and sustainability bonds, because the EBRD is not only an issuer of green bonds, but perhaps more importantly, an important investor and, most cases, lead investor. But beyond being a mere investor, we support our partner banks in green asset criteria and developing green bond frameworks and finding the opportunities in their markets and finally reporting of such assets. So I'm very interested to hear what's been happening in the Eastern Partnership countries and Central Asia from the people on the ground, so to speak. And I look forward to hearing all the ideas and the what and the why and the how. In this session, each of our panelists will make a presentation. They will have 15 minutes for their presentation. We have 3 panelists joining. 2 of them will join online. And after the presentations, the floor will be open for a general discussion. Only the first presentation will be supported by slides. The other 2 presenters will intervene from the floor without slides. So without further ado, I will now give the floor to Mr. Stanislav Dubko, Green and Sustainable Finance Expert, Berlin Economics. Mr. Dubko was one of the key researchers working with the OECD in conducting the analysis on green capital markets in the region, and I believe also in Uzbekistan recently. Mr. Dubko will present OECD's work on green bonds as well as an overview of the latest legal and regulatory developments in the countries aimed at facilitating more green bond financing. Stanislav, the floor is yours.
Thank you very much. Today, I'd like to present the results of this study called Greening Debt Capital Markets in the region. I would like to note that even though this study has been finalized by the end of 2021, some of the results were already presented at OECD events last year, but I have updated the information as much as possible up to date. And I think the main conclusions made about 2 years ago probably still remain in place. And I will comment if there are any changes the way I see it. So the study covered 6 Eastern Partnership countries and Kazakhstan. And the idea was to assess and discuss the capital markets development in these countries in light of introduction of green bonds, which happened already in some of these countries. Look at the barriers to scaling up green finance and look at the... I switched on my computer, not on the overall screen. Anyway, I'm still on the slides. Second point was to take a look at the barriers, and a third pillar was to take a look at the potential role the governments and regulators can play in further developing green bond markets. So the study was finalized with 7 in-depth country assessments, separate assessments, and also 1 summary report was prepared, and I think these reports can be they are available and can be you can have a look at them if you go to the OECD website. So let me start. I've structured the presentation maybe in a bit unusual way, just because the green bond issuance is still a rare case in such countries. Let us first go through the actual issuances that happened and actually represent all of the market at the moment. And it's just not too much information, just 3 slides covering the issues made so far. So let's start with international issuance. We have 2 countries that where we had issuance activity by the local companies, but who issued externally on the international markets. So in case of Georgia, we have 2 sizable green bond issuances, one by Georgian Railways in 2021, well, I will comment on the use of proceeds a little bit later. The second issue was Georgia Global Utilities. It's a company engaged in water management and also electricity production from hydro resources. This you can see on the slides the parameters of these issues, the duration, the coupon rate. All of these issues have been done on foreign exchanges. The use of proceeds in case of Georgian Railways was refinancing of some existing debt and also some rail infrastructure projects investments. In case of Georgia Global Utilities, this was also a case of refinancing. Let me talk about Ukraine first, and then we will discuss why it's very often that refinancing takes place in case of issuances from these countries. Ukraine, 2 major issues. First one was actually the pioneering issue in the region. This was done by the Tech Renewables company in 2019. A large private company that is a renewable energy sector company player having some solar PV plants to finance. Also, this was not exactly a refinancing, though the project was already initial stage of the project development were financed from other sources, and the bonds were issued at a later stage of the project development. Ukrenergo 2021, it's a TSO, transmission system operator of Ukraine, the largest issue from the region so far, $825 million US. Also refinancing. In fact, well, Ukraine has had quite an attractive fixed feed-in tariff for a few years. This is over now, but it happened that the Ukrenergo was the company and is the company, or one of its divisions is responsible for also payments for the electricity to the providers of renewable energy sources electricity, and they accumulated quite a significant debt. So one of the ways to use the proceeds was to refinance those debts. So I can, even though these issues, they were quite favorably accepted and they were oversubscribed, we are talking about situations when construction risks usually they're quite high in countries of the region. So unfortunately, I don't see that green bonds could be issued at the very beginning of the projects. So normally that would be either refinancing of already existing installations or financing at a later stage. Let's quickly go to Kazakhstan and Armenia. Next slide is about Kazakhstan. If you see a number of issuances here, the amounts are not that great. We are talking about local market issuances here. So from all the way, I mean, from 0.5 million, the maximum, this is the minimum, and the maximum amount was 43 million. So not large issuances, of course, would not be suitable for the international markets, but quite a few issuers, as you can see, and Kazakhstan has been developing quite well in this regard. So some of these issuances are very recent. Two of them are from this year, basically. One by a bank, the other one by the also transmission system operator. Now let's go to Armenia. Here we have a case of Ameriabank issuing two issuances in 2020 and 2022. Let me not go too much into these projects because we do have a representative of the bank speaking here today, but also these projects are, of course, in this field of green finance, green projects financing. Now, this is basically the whole picture. So there are no other green bond issues coming from this region. Not much, let's say, not many issuers, not very significant amounts. But let's see how the local regulatory framework has been developing in these countries. So here on this slide, there are some examples of elements of green finance regulatory framework. In case of Georgia, everything started in 2019 with the development of a roadmap for sustainable finance, some disclosure and reporting principles, and let's say culminating in adoption of green taxonomy at the end of 2021. Kazakhstan also adopted a green taxonomy in December 2021, and the local stock exchanges, namely Astana International Exchange and Kazakhstan Stock Exchange, they have certain ESG disclosure rules, certain local, internal taxonomies to define green projects for the use of proceeds of green bonds, and in some cases of technical support or some beneficial treatment of companies willing to list green bonds on these stock exchanges. In case of Ukraine, we have a NBU, a National Bank of Ukraine roadmap that also has certain provisions for the ESG disclosure. Green bonds have been put into legislation. So from July 2021, there's a specific section in the law on the capital markets defining green bonds in Ukraine. National Commission for the Stock Markets and Securities issued some guidance recommendations, documents on this issue, and there was a certain concept for the development of green bond market adopted on 23rd of February 2022, and I still remember a quite happy post on Facebook from one of the participants of today's discussion, Andrei Frolov. He worked at the time in the State Commission for Securities. Unfortunately, 24th of February was quite a gloomy date for Ukraine, so I don't think green bond market developments have been really in the center of discussion in Ukraine since then. So these are some elements. I can't say that any of these countries have a full regulatory framework in place, but we can even say that in some cases, it will not even prevent the issuers to go and issue green bonds, like in case of Armenia, when in the absence of any elements of green finance regulatory framework, unless I'm missing something, they were still able to issue bonds. And if you issue them internationally, then of course international rules would apply. Now, some of these next slides are about the obstacles we identified during the research. First obstacle is relevant not just to green bond issues, but to any kind of investment projects in these countries, I think, is a lack of sufficient pipeline of projects that are transparent, high quality, sizable. So this is a problem in many areas of investment. It's a generic obstacle. Now, in some cases, just because green finance, renewables, this is probably first what comes to mind when we talk about green finance. Investment environment for renewables has not been necessarily clear, understandable, and stable. I already mentioned the case of Ukraine, very high feed-in tariff in the beginning, a lot of indebtedness towards the electricity producers afterwards. but also in many cases, it's also relevant to Central Asia countries. There's a persistent use of incentives for fossil fuel consumption. So in some of these countries, including Central Asia, there's a still significant government subsidy, direct or indirect, to the fossil fuel consumption, energy sector and other sectors. So this is, of course, preventing more deployment of renewables in the countries. Now, there's also a lack of sizable potential issuers on the market. If companies want to go international, of course, $500,000 or $40 million issue is not possible. We have to talk about much larger transactions, and of course, there's not so many companies who can offer such big transactions and have corporate governance on an adequate, transparent level, so that the investors, bond investors, could trust such issuer. Now, talking about the development of local bond markets, first of all, we need to remember that green bond is, first of all, a bond labeled and marked green, but of course, green bond market is not likely to develop in a country where bond market in general is not developed. So some of the preconditions for development of the bond market as it is the presence of institutional investors like pension funds or large insurance companies. So the lack of these institutional investors could be a problem in these markets. Also, the liquidity of the bond market, markets are not necessarily liquid in these countries, and bond market infrastructure. So, for instance, allowing foreign investors to trade in the local markets through domestic clearing and settlement arrangements, sometimes quite crucial for the development of the local bond markets. There's also need for repo facilities and all the different elements of infrastructure for the bond market that should be in place to allow issuance of bonds, including green bonds. And one more slide on the obstacles. The green finance regulation is, of course, it's still in its infancy, but I think we'll be developing very quickly in the coming years. And such conferences, this is quite important, I think, in order to make sure that different countries move in that direction and develop the frameworks. This includes ESG disclosure rules and risk management guidelines. Local taxonomies. I mentioned already that 2 countries in the region have adopted taxonomies already, and some more are working on it right now. And also a green bond definition in the local regulation. And maybe one last issue I will mention, in the private sector, it's also important that banks have the capacity to generate green assets, for instance, provide green loans, which could be used as, for instance, as underlying assets to refinance their transactions with the issuance of green bonds, or just generally the capability to issue green bonds. If bonds are attracted first, then banks need to make sure that they know how to finance green projects and provide green loans. And I will finalize my presentation with 2 more slides very quickly. We've suggested in this report, and you can, of course, have a look and read in more detail, what are the policy options that we are proposing. So on the supply side, we think that there should be some examples and sovereign issuers. And for instance, this is the case in Uzbekistan, for instance, when Uzbekistan was one of the first countries to issue sustainable goals backed or linked bonds. Definitely interesting and good example. So the sovereign can lead by example in a country, but also some specialized agencies and state enterprises in some cases could be those, they are sufficiently large in many cases, they could play an important role in leading by example. Now, bank principles and regulations, they should encourage the issuance and the not necessarily talking about some direct benefits or like tax-related benefits or other issues, but treatment should be preferential enough to incentivize issuance of green bonds. And there are many other aspects as well. Let me go to my last slide and talk about some policy options on the demand side. I would say, well, of course, usually in the countries in the region, local markets are not quite developed, are not able to supply significant, there's no demand from the local investor for green bonds yet, not as much. So it's crucial that international markets are taken into consideration, and some of the eligible and suitable borrowers try to tap the international markets, where the interest in financing green instruments is much larger. I would note a very significant role in all of these markets of what IFIs and development banks and institutions are doing as anchor investors, able not just to provide finance, but also to technical assistance and support in preparing some of these projects and issuances. And upgrade of the local green finance frameworks in light of what is going on in Europe as well. So, as you know, right now there's a EU green bond standard being discussed. We will probably talk about it later today. So you don't have to, I think, in these countries, no need to adopt something exactly like EU is doing, but there are things that could be practically done on the local level. Thank you very much.
Thank you, Stanislav, for that information, providing sort of the background to what's happening on the market in this region. If anyone has any question on Stanislav's presentation, I open the floor for a question or two. Yes, please.
Thank you very much, and thank you, Stanislav, for really a very interesting and concise but really informative presentation. So that's great. I would like to ask your comment because I understand your presentation was very much on the kind of national level, the level of sovereign bonds. If you can comment about the feasibility and any experience with the use of municipal bonds, the bonds at the local market. Thank you.
Yes, I should say that we looked at all sectors in this study. So we looked at the national level and the opportunities of green bonds issuance on the sovereign level. Municipal sector as well. It's just that in these countries, it very much depends on the local legislation, but the activity by issuance of bonds by municipalities is not that great. These markets are not that developed. So we looked more at the private sector. And as you could see from the first slides, the issuers or the actual issuers of green bonds in these countries, they were either large government-owned companies or private companies. So far, no municipal green bond issuance activities. I think it's a very interesting sector in general, and we've provided some recommendations related to the municipal sector in particular. I think, for instance, since I come from Ukraine, I can say that Ukraine in particular has had a very good stretch where more than 40 different cities already issued bonds in the period between 2004 and 2009. So there was significant experience in issuing municipal bonds. At that time, of course, nobody talked about green bonds. But that sector needs to be looked at for a very particular specific country, because the budgetary legislation and the ability of municipalities to issue bonds may differ very, very much depending on the country.
Thank you. If there are no other questions, I now want to give the floor to our next speaker, Mr. Ara Sargsyan, who is the head of Financial Institutions Division at Ameriabank in Armenia. Ameriabank, as you may know, is the largest bank in Armenia. And as we've heard, they've had two issuances. And Ara, you're the man on the ground, so to speak. So first time now we will hear how is it to be an issuer in this region. Ara, you have the floor.
Thank you, Yucel. Thank you, Nelly, for inviting me for this event. And sorry for participating online. Opted to save my piece on carbon emission. Yeah, as you said, Yucel, happy to speak about Ameriabank's green bond issuances for the past 2-3 years, and the debut green bonds we placed successfully in 2020. The bonds, in fact, were sizable placements of 42 million euro at the time. It was a private placement that we issued for our international investors, DFIs, that we actually developed with the green bond framework and all the institutional setup for this large leap, and 2 local placements of 8 million USD and 3 billion AMD in 2022. Which were placed locally for local capital markets and was another success in follow-up to our international placement. Cut a long story short, we are that was I keep saying that you won't obviously go and issue green bonds overnight if you don't have sufficient experience. And the green bonds we placed in 2020 was a logical graduation or a move from where we were, and that was based on successful placements of nearly 250 million USD funds in different energy efficient and renewable energy projects. Facilitated together with our DFI partners, a dozen of them, and yeah, green bonds were kind of a highlighting point or a culmination of those successful allocation of those funds. Yeah, we are the leading financial bank and financial institution. We are the leading bank in the country, and you may assume we are a trendsetter. And happy to say that further to our debut green bonds, some of our peers and colleagues also initiated and actually placed some green bonds in the local markets, and based on our experience and our their own track record of green financing. Now we are in mid-development. This is too early to say because we don't have yet board approval on that, but we are in mid process of developing a sustainability unit or division, whatever you call it, to reconcile all these kinds of activities within the bank and put that in a more sophisticated institutional level where we are now. Because what we have currently is practices in different parts of the bank, be it in risk management, business lines, even PR and marketing, but currently we are trying to console all this in follow-up to international best practices and benchmarks. This is very much in short about our experience, about our aspirations, and happy to answer any of your questions or questions from the audience if there are any.
Thank you very much. So I will now open the floor for any questions to Ara about Ameriabank's experience, Armenia's experience, Arab lessons learned. the market right now. Please go ahead, Nelly.
Hi, Ara, I'm happy to see you and thank you for joining us. And also I'm very happy to hear that you're already discussing with your management the possibility to set up a specialized unit. I think this is a good idea and a good model for other financiers and bankers in in other banks in the region to do. I think you need people who have strong skills and know the green technologies market very well. But my real question is, based on your experience, you know the market, you know the sector, and I was wondering, do you possibly think there might be others following your example, particularly, let's say, in the banking sector? Do you see banks which may go for this and go to the market to raise debt there for green, in Armenia in particular?
Nelly, I think that's a very, very good question. It applies not only Armenia, but also in the countries who are willing to transition and do more green financing and facilitate more green financing. I think other things unchanged. The market players, the banks only, won't bother themselves entering into this field if there aren't incentives or there aren't enough incentives to go for it. I mean, back to 2020, obviously we launched this project not in 2020, but in 2019. So we talk about 4 years back exercise. I remember it well. We were very enthusiastic. But that's all, but that's it, and only. There was no incentive from the lender side. There was no incentive from the regulator to push green financing and do more green financing. We only relied on our solid experience and track record of, as I said, facilitating around 250 million USD funds over the 10 years. In the local market, which is a sizable amount actually to manage, but that's it. And we were just thrilled, and because we are the pioneer, and we have been a pioneer in all respects in the local market. Whatever we launch, whatever we do, our peers, some of our peers do follow, and that's good. To know, that's good to acknowledge. So we decided to go for another challenge and do green bonds together with our partner DFI. It went well. It was a successful placement. We enjoyed it very much. We learned a lot, but I keep saying to my colleagues in all sorts of discussions, don't go for it just for the sake of doing it. Follow the international best practices, because the risks of failing are much higher than the benefits, if in fact no benefits. But once you are in, you raise the bar, you follow all the best international best practices. So we hope very much that soon there will be incentives from the regulator, be it on lower risk weighting on asset side or lower reservation costs on the liability side, let alone the reduced costs on funding in general. I think we can double, triple, if not increase by much bigger scale and enhance this practice in the local market, because I mean, this is everywhere. Green financing per se is literally everywhere. Whoever installs a new equipment in its factory, in its new building, it's green per se, because nobody follows all practices, and per se it is energy efficient and more resource efficient installments and investments. So we can go and do more and increase these amounts times if there are strong incentives. Nevertheless, I believe not only the national regulator, but all should come from Basel as far as regulation and financial regulation is concerned. So, yeah, we look forward to some incentives to do more and to
if I may, one comment relating to this issue: if banks can be, if other banks will follow the examples of banks who create technical teams, green banking teams, and try to develop more the competence in the green finance, I think it's important that there are such examples in the region. And I think, well, first of all, we have one bank here today, SQB from Uzbekistan, is one of the, I think, regional examples of a bank that has created quite some time ago a specialized green banking team specifically with the idea to be able to provide green finance to their borrowers. And I think from the international financial institutions, all the banks in the region, they do hear a lot of interest in developing green finance in the region, and green bonds is just one of the instruments to attract green financing for your operations in the country. So you can just use credit lines coming from IFIs. But I think that such examples are quite important. And by the way, SQB itself also not just participated in green credit lines of IFIs, but just very recently issued a green bond as well. So first issue last month in August by SQB is also one of the good examples in the region of the Central Asia. Thank you.
We have at least one representative I know from SQB here in this meeting right now in the room. So congratulations, first of all. Feel free to intervene if you like. We talked about the need for sort of regulatory incentives. I talked about potential lower risk weighting, etc. As some of you may know, this has been a hot topic in the green finance space for a very long time. Should national regulators incentivize green assets over non-green assets? There was an interesting, so I think the discussion has progressed very, very rapidly. Central bankers are usually not known to be revolutionary. They are the most conservative people in the room. But the climate tragedy has progressed so rapidly that I think regulators are also considering to be more active. An example comes from Hungary. That's I think 2019. The National Bank of Hungary decided to give lower risk weighting to green assets, first in the retail residential space, and I think a few years later they extended that to SMEs. That was I think a trailblazing decision. The logic was that as the regulator in the country of the financial monetary system, let's say, economy, the National Bank of Hungary said it is their duty, it is their within job description to care about the future of the economy, to care about the risks to the economy, which more and more include climate risks. So with this logic, they extended that incentive, which I think is a right step in the right direction, and a very interesting conversation that central banks actually have to look at climate risks, and in doing so, consider incentivizing it in banks' balance sheets. So, and also Ara mentioned Basel. Just to remind, Basel is the Bank of International Settlements, headquartered in Basel, and they are the central sort of central bank of central banks, if you like. They issue, they're formed of central bankers, and they issue regulation that set the standard for central banks to follow. So that is the context there. I just want to ask one thing about the use of proceeds and how you sort of manage the portfolio. I understand there is some refinancing there, but besides finding eligible investments to allocate, how do you handle the taxonomy? How do you handle the criteria? Do you have specialists in the bank that actually find the opportunities and are able to evaluate in accordance with the framework that you have? Like maybe you can share a little bit about that experience to give us some idea about what needs to be done internally, organizationally, and capacity building wise in issuers.
That's a very good question, Yucel. And that's it. As I said, we are in mid-process of developing exactly this practice and capacity building tool. Actually, it's a sizable budget of around 500K, and we have allocated this amount for advisory, and we'll be hiring advisors to run this for us. The way we utilize the funds is according to our GBF, Green Bond Framework, that we developed prior to placement, which was then reviewed by Sustainalytics, one of the reputable firms in this league. And actually, the annual impact report that we issued second time this year was verified, was reviewed and verified by Sustainalytics too. We run through several rounds of challenging questions, challenging the portfolio, etc., etc. And yes, we do have internal capacity within our risk management directorate, who are responsible for this portfolio management and reporting as such.
Thank you very much, Ara. It's very enlightening to hear from you as a local player, as a local issuer. With our next panelist, we will change our focus a little bit, and we will go perhaps in the other direction. We will hear from, if you like, a green bonds hero, because I'm talking about Mr. Sean Kidney, who's the CEO of Climate Bonds Initiative, an international NGO working to mobilize global capital for climate action. And Sean is a member of the European Commission's platform on sustainable finance and has contributed to developing the EU Green Bond standard as well. Sean, you don't need too much introduction. So you're joining us from New York, as I understand, from Climate Week. So we look forward to hearing from you and maybe some insights from New York. Take the floor, please, Sean.
Well, thank you for that effusive introduction and welcome. And it's great to be able to be here, including if Ameriabank has been a pioneer, of course, the pioneer in Armenia to get things going. Look, I want to give you a bit of background to the market and some of the issues that are coming up and how they're being addressed. Above all, I want to suggest that for banks and corporates and governments in the region, this is a real option which is getting more attractive as we move through the years. Yes, incentives, but more fundamentally, the nature of investor engagement in the context of things that are worrying them is increasing demand and leading to a situation whereas in advanced markets like Sweden, where an investor told me recently that if a company comes to market and issues a bond and hasn't issued a green bond as part of their mix, the first question they asked them is there something wrong with you? Is there something we need to know? Investors are concerned about the future. They're absolutely concerned. The global investors, and I'm not going to talk about Armenian domestic investors or the like, because that is a different challenge. But they're beginning to become part of the story. They're concerned because the broad climate landscape is challenging in two ways. I mean, first, the stuff we know about, the headlines in the papers, we've seen the fact that the World Meteorological Organization has now said that we will meet the maximum temperature rise level that the G20 says we must have, they said last November, in 2027. In other words, 1.5 degree warming in 2027. This is losing the climate battle. We are now consigned, unfortunately, to significant climate impacts going forward in the very best scenarios. We've seen heat and floods across the last few months across the world in many places. Well, this is just a taster of what we're going to see every year. Volatility will be the new norm, and investors are anxious about that. But curiously, that's not what's driving investor demand as much, which is a defaulter's question, as much as the other issue, which is, I'm going to call the concern about finding opportunities in the tsunami of change that investors now believe is coming through the world economy. When the Biden climate summit happened in 2021, and we saw all major Western economies, including Europe, but in fact, Europe was the first by earlier in the year, commit to strong 2030 as well as 2050 emission reduction targets. Will they meet it? We don't know, but everyone's saying the same thing. Something changed in global investors, and that was this idea that the future's been decided. Oh, okay, they were saying, okay, it is going to be green. We now believe that. The only question is how quickly it's going to happen and who are going to be the winners and losers. At that point, we started seeing the green bond market palpably become a signal of companies and entities that are doing something. Let's call it becoming future fit. In other words, lower risk. And now when you talk to investors, they see companies that have issued green bonds at least a couple of times and companies that are in line with various taxonomies has been largely likely to be lower risk than other companies because at least they're shifting and everyone knows things are shifting. The global economy is changing and going to change very radically. That's essentially the story. I mean, this happened, in fact, at a sovereign level. 2 years ago in Glasgow, the Australian government tabled a net zero plan, and they're currently about to produce a sovereign green bond. With the annexure to that net zero plan, the Australian Treasury wrote quite a long article about how global capital markets were shifting to preference green. And if Australia didn't adopt the net zero plan, it risked losing access to global capital markets or preferential markets. And its borrowing costs could go up, this is in the words of the Australian Treasury, could go up 100 to 300 basis points. This is a AAA issuer. Now, I didn't say that, but that is the direction of travel globally. And many people are recognizing that. So the benefits, if you like, of participating in the green finance market, of which there are many aspects, is about signaling to investors that the organization is doing something to address the risks, to change its portfolio and stay ahead of the tsunami of global change that people are coming through. You look at it in different areas. Look at the commodities sector, for example. We are seeing a very rapid shift into a new commodities boom, where we will see nickel, lithium, cobalt, vanadium, and various other minerals become the currency of the next 30 years, while we'll see a reduction. We're seeing a quick reduction already in coal in most countries, in fossil fuel usage, because there's a delegitimization, especially gas, and there is a chance, well, it's happening now, that other options are becoming cheaper. In the US, for example, in Republican counties now, we see most Republican counties building solar instead of gas plants purely because it's cheaper. And this is a feature playing out around the world. So the background, if you like, is this turmoil of changes in the global economy. In that context, showing that you're doing something is becoming more and more important for access to capital, let alone preferential access. And we see that playing out as subscription rates, which are substantially higher as a rule for green bonds and sometimes social and others as well. We see in USD and EUR price differentials. We're publishing our latest green bonds pricing report this week in New York, in fact, which will show that despite the anxieties of the last 9 months by many companies, and we had a meeting with a major treasury in Western Europe recently who was saying, is the price of green going? Actually, no, it's still there, still very clearly. There is a pricing benefit in hard currencies. And the move by many regulators to bring in support. You mentioned the Hungarian Central Bank, and I give a cheer to the Hungarian Central Bank whenever I can, because they kicked off this discussion in Europe. But in other parts of the world, the People's Bank of China, the Reserve Bank of India, and many regulators already have incentives. The Network for Greening the Financial System, which is, as you know, the association of, I think it's 148 central banks now, looking at the forward financial risk, stability risk of the financial system as a result of the impacts of climate change, has been actively canvassing the sorts of measures that could be taken. Certainly in emerging markets, we see much more appetite for regulators moving. They're more used to doing it. And we expect to see a lot more movement in this area, picking up the comments that were made by a previous speaker. But there's more to it than that happening. We see on the part of governments and development banks, like the EBRD, substantial support growing for green bond issuance, whether that be technical assistance programs. And by the way, if you're interested, please do talk to our EBRD colleagues about the support they can offer if you're looking at this. And also credit support programs. We now see around the world a substantial uptick in the last 2 years of green bond credit, specific green bond credit support programs by development banks and countries such as Sweden, Denmark, the United Kingdom, France, all have green bond credit support programs. Now, an institution has to decide whether the cost of credit support is worth it, et cetera, et cetera. But in terms of increasing access to capital, skewed as it is towards investment grade, these are important developments, and these are preferentially available to green, not to other sectors. We see work by many institutions around the world about how to grow green capital markets, and it is, of course, tied to the problem of growing capital markets in general. In Kazakhstan, and I see that Aygul Kusalevia is on the call from the Astana International Finance Center. The work to grow capital markets, let alone green, has been going on for some time, and there's been some movement in that area. And we've done some work with the EBRD on how to grow green capital markets in Kazakhstan, in Mongolia, and places like that. But it is a challenge. How do you do these things? How do you get them going? Well, you do need demonstration issuers like Ameriabank, who will show off to the rest of the world, who have benefits themselves, but also will be the kinds of leaders that will be emulated. That is one thing that's important. You have to play with a few basic requirements. Scale, as our speaker said earlier, volume is critically important to getting the access to investors, especially if we're looking at international investors who require larger volumes. Yes, you need to have assets or projects that you can allocate the capital to. We've got some relatively easy rules, I'm going to say, that have now become protocol, exemplified in the International Capital Markets Association's Green Bond Principles, in the Climate Bonds Certification Scheme. If any of you are interested, please look at our website. And in the forthcoming European Green Bond Standard, which will come into force sometime next year, will be an aspirational standard initially. It's tough, there's some tough measures in it, but the rules are fairly clear. The nature of reporting and transparency, you can use refinancing. You know, a solar farm that was built 5 years ago, or a loan was made to it 5 years ago, is still green. Just because it's not new doesn't make it any less green. Bonds are largely a refinancing tool. So the incorporation of the refinancing of assets that do qualify, like railways, for example, electric railways in particular, has been a feature of this particular market and provides opportunities for issuers to get to volume more easily than if they're simply looking at project finance, which is a narrow slice of any balance sheet. We have key principles like there's 2 years to place the funds. With one sovereign issuer I'm talking to at the moment, they will raise the money in the near future and they will then take 2 years to deploy the funds. Perfectly fine. There are rules for all of these things in place now that have become the norm. So, look, it's been a pretty exciting ride and still is an exciting ride. This market has grown from when we started many years ago, when I was first in the EBRD, trying to convince them there was something here, and they were looking at me like some kind of madman. A market that was $2 billion, and I should say EBRD's treasury was one of the early pioneer issues in this market. And now we have a market that's $3 trillion US outstanding and growing. That's just the green side. And then the daughters of that market, the related bonds, social, sustainable, sustainability linked bonds, etc., are another $1 trillion plus. And it continues to grow as a share of global bond markets, very clearly on the back of strong investor demand. I mean, we have that. It's MDBs who started this market. It's banks, corporations. It is municipalities around the world. So the only question about municipalities is, do they have bond issuing power? Have they got assets or projects that can be financed using bonds in this area? And of course, that's a problem in most areas. Are there vehicles to support them? One of the things we talk about in lots of countries is the need for municipal finance authorities, modelled on things like Communinvest in Sweden, which essentially borrows wholesale to on-lend to smaller municipalities. This is something that can work in many countries that could be set up with the support of developed banks that can provide credit support for the first year's operation until capacity, reputation of the market is established. There are many things we can do for municipalities, and of course sovereigns, which have been notable in Eastern Europe as well as in other parts of the world. I think now we're up to 50 of the regular sovereign issuers in the world have green bond programs. There are about 100 regular sovereign issuers in the world. This is pretty substantial change. So that's what's going on. It is not just bonds, by the way, just to be very clear. The green loan or sustainable loan market, in terms of numbers of deals globally, way outweighs the bond market. Smaller, but a lot more of them. We've seen the growth of sustainably linked loans by bilateral loans, in some places helped by internal risk-weighting support to encourage staff to do more. And particularly the French banks have all done this. We've seen the growth of sustainability linked bonds, which is picking some key performance indicators and promising a higher coupon if they're not met, essentially. Chile has been the first to do it. There are many others. Now, you know, we're very keen on the sustainability linked bond market, but we're a little bit uncertain about practices so far. We would argue that about 3/4 of sustainability linked bonds issued so far, and this is a market of a few $100 billion now, a week. We need to have them linked to an entity that is having a proper and robust transition plan, which takes me to the next development, which is in fact around transition plans. So in Europe and the United Kingdom, and in a couple other countries like the Philippines, of all places, transition plans for listed corporates are becoming mandatory. That is, you will be required now to maintain your listing to have a transition plan. This is a very, very big thing in Europe, of course. Now, that means that all companies, and frankly, we would argue municipalities and governments as well, but let's get there later, are now in the midst of preparing plans for how they're going to deal with forward risks. the guidance around the nature of what they have to do is developing. In some areas it's clear, in some areas it isn't. Rules are being in place, but being put in place. But the work of looking at what kind of transition, with one key metric to them, is how do you fit within shifting to a 1.5 degree world, the G20's official target for the planet, is now what are truly underway. Our general argument is everyone should be looking at it, get started on it. Rule sets are becoming clear for the purpose of these investment markets. We're publishing in New York tomorrow a guide to assessing transition plans, which is being picked up by regulators around the world as a toolkit, for example. We're also separately publishing reference criteria for key sectors, everything from steel to property to energy utilities, to guide those kinds of organisations in what are appropriate trajectories to look at a transition plan. And we're working with our friends at the Science Based Targets Initiative and other bodies along these lines. This is the new frontier. You will see a lot more coming out of the European taxonomy in particular, and various other regulators around the world about how to tackle this area. You will also see the growth of what I'm going to call entities bonds, entities debt. Now, this is similar to the sustainability bonds, but it's tied to, well, does Ameriabank actually have a plan to deal with the nature of climate impacts? Well, heat, floods, greater risk of those sort of things. How will they affect their portfolio? Is there some way of Ameriabank dealing? And I'm sorry, Ara, I'm just using you because you're on screen. And then also the tsunami of change that's happening to the global economy. We have a change to the commodities sector that's well and truly underway. We have a change to the energy sector that's well and truly underway. Electric vehicles, for example. 20% of all cars in China sold last year were electric. That's going to be 50% very quickly. That means that for an ordinary mum and dad, whether that be in Serbia or Georgia, they'll be simply buying electric because it's cheaper, subject to the grid catching up for. What does that mean for our portfolio risks? Are we taking advantage of that? Do we have too much exposure to old companies that are not making a change? Who looks like maybe signalling with green bonds and green loans, they're ahead of this change and starting to grapple with it? And how does that show up in the portfolio of a bank? How, of course, does it show up in the portfolio of a company or a country or municipality is a slightly separate question too, weighted towards cities, properties and protection. But, I'm just going to say, look at the last year. Look at the losses that we felt around the world and start thinking about that being tenfold. And what does that mean for how we manage our portfolios to be more resilient? This is where we're going at the moment. But look, next, we will see more work on clarifying rules, as I've mentioned, transition plans. In the European taxonomy, we have another crop of guidance coming from the system. We do have to do a bit of work on improving the EU taxonomy to make it easier. And we've got a mandate from the Commission to look at usability in the near future. But then we will pick up new areas of guidance in agriculture and land use, for example, where we have so far failed to provide useful guidance to the industry. You will see around the world this happening. India's got a taxonomy now, Singapore, Colombia, Thailand. There are in fact 47 national taxonomies being developed. I mean, even the Russians adopted a taxonomy in September before the crazy invasion of Ukraine, because the central bank and Ministry of Finance decided this was useful. And this was taxonomy, by the way, despite Gazprom's fury, in line with the European taxonomy. The Russian financial sector, or at least the authorities, understood the direction of travel here. And by the way, there's been bonds issued in Russia that have received a significant greenium in rubles from domestic investors. So let's see what happens when this war is finally over, as the economy in Russia tries to rebuild. But certainly you've already heard about DTIC in Ukraine, and there are many other parties in Ukraine that are looking at green, planning to go green. And of course, the cabinet itself has a subcommittee looking at rebuilding Ukraine as a green country and getting capital in for that, energy in particular. There's many really exciting things being planned there. And we expect to see, with the support of the European Union, developments. with the support of the European Union. I suppose that's my last point. You will see more coming through. Announcements will be coming out later this month. You will see the EBRD, great institutions it is, stepping up with further support, but other institutions as well. And that's, I guess, the exciting thing about this market. It's not the direct individual benefits. It's about the extent to which this is coalescing a huge group of institutions who now see the fiscally efficient opportunities available for growth that are working to grow this market and will be in the future doing much, much more. Just watch this space. This will be a lot bigger than a $3 to $4 trillion market. And Ameriabank, of course, will be a winner.
Thank you. Your energy, your green energy is infectious. We're all riled up. And I just want to say that we haven't spoken with Sean prior to the meeting, and the EBRD plugins were just comes natural. So thank you for that. So I now open the floor for any questions for Sean. He's covered quite a wide area, giving us the perspective. Anyone would like to ask questions? Yes, please.
Hello, my name is Rustam, Kyrgyz Republic, the Union of Banks of Kyrgyzstan. In our republic, two commercial private banks already issued social and green bonds, but we still have no approved taxonomy and approved the roadmap of sustainable finance. And how is important to have the approved taxonomy in the way to develop of the green bonds market?
So look, the taxonomy is just a guidance about what science is telling us we need to do. That's all it is. We have the EU taxonomy in place. And of course, if you're seeking funds in international markets, the EU taxonomy will dominate and be the reference point anyway. In the national taxonomies we're developing around the world, and we've had some input into the Mongolian and the Kazakh taxonomy, we are referencing the global norms and looking for tailoring the taxonomy to local conditions as distinct from inventing. We're not inventing. It's really important that we continue to work to global harmonization. And we've published, on behalf of the European Union and the People's Bank of China, the Common Ground taxonomy, which shows you just that, the common ground between the EU and China as guidance. So I'm going to say in Kyrgyzstan, look at that, use it. It's there as a good for the world right now. It gives you clarity about what works in two markets that are potentially important to you, China and Europe. And we are expanding that at the moment. We're bringing in more countries into that conversation under the umbrella of the International Platform on Sustainable Finance. So there's plenty of taxonomy tools you can use. Doing a domestic taxonomy in Kyrgyzstan would be useful to educate more institutions, municipalities and others over time. It's not a prerequisite. We don't need that to start. We need is to grow a little later. And there'll be help for that, by the way. Should the central bank or the Ministry of Finance want to pick up that thing, then either EBRD or Asian Development Bank or some other parties will happily provide some technical assistance around that. So let's get there, but don't wait. And we'd love to see you in the market.
Thank you, Sean. I realize that in the interest of time, we can wrap this up. I think I'm between you and your lunch, so I'll try to do this quickly. Thank you very much, Sean, by the way, joining us from New York, and have a good day. It was fascinating hearing you again. Thank you. So today, this session was, I hope, very interesting and informing for you as well as it has been for me. We first heard from Stanislav about the summary issuance history from the region and some obstacles he mentioned, such as lack of sufficient pipeline, the existing incentives, unfortunately, for fossil fuels, and very important, the lack of sizable issuances. He mentioned the the green finance regulatory frameworks need to be developed. The actual bond market needs to be developed for green bonds to take off. And they mentioned the importance of IFIs, such as the EBRD, in being the anchor investors. And then we heard from Ara about his experience in Ameriabank, but actually being the issuer in the region and a successful one at that. And he shared his experiences with us and talked about what more could be done, and also mentioned that Ameriabank has built an internal human capacity and organization capacity for managing these issuances. And last but not least, of course, we heard from Sean Kidney, who gave us a big perspective, the global perspective, the big picture. He said, this is a growing market, and companies, institutions that are not going into green bonds are not going to give the right signals, because investors are looking for companies that think about climate risks and that are doing something about that. So that is, it's becoming a signal to investors. And he talked about the tsunami of global change and the commodities boom and a rapid rise in renewable energy becoming cheaper. And within all of this turmoil, investors are looking for a profitable but a sustainable path to the future. And they're looking for more green investments in green bonds. He did say the subscription rates are higher, and that we don't need to worry about pricing. The pricing has been positive. And there are moves by many regulators around the world in setting up the right platforms in their countries for further issuance of green bonds. Talked about the importance of technical assistance, such as EBRD provides, and the importance of demonstration issuers, and to have the projects. Self-refinancing is fine as long as the you find the eligible investments already done. It's a huge market, $3 trillion today, just green bonds, and about 1 trillion or more in sustainability-linked bonds, etc. So there are, and the importance of transition plans, of which, of course, EBRD is also providing technical assistance, I should say, and that the future hopefully looks green. Definitely, we need the future to be green. And with that, I will leave you to go have your lunches. Thank you very much for your patience and for your attendance. Thank you.